Hey, welcome back to the Synergy. It's insurance, finance, and you. All right, so during this session, what I do really is to go through some of the questions that come out of my consultation or that of the advisors that work with me. And my goal is to make sure that you understand why you have your different covers, right? So welcome back. This is the first live streaming that we're doing in the year in 2023, and it's been amazing working with people, helping them to put the right covers in place, so the mortgage insurance being done. So if you're watching this and you have a mortgage and you don't have any form of insurance on it, oh my God, why would you leave that risk, uncovered or on not taken care of? You need to do that. All right, so if you're watching this and you have a mortgage, it's one of the biggest debts that people do have in their lifetime. And you don't want to leave that headache for your family if you are not here, right? So that's what insurance is all about, is to make sure that you have a backup plan if you are not working. Or if you're not here to do the work. So if that has occurred, or if critical illness has occurred. So there are two ways in which you can cover your mortgage. You can cover it with just life insurance, but a better way to cover it is to make sure that you have covered it with life and critical illness cover. Why do I say that? So it happened before that people take on mortgages and are diagnosed with critical illness. Maybe, for example, cancer is very, very rife right now, and the statistics that we have right now is that out of every 2 people that you know, one of them may be diagnosed with cancer. So it's one thing that you want to make sure that at least have a backup plan if it were to happen. Now, it's not everybody that gets diagnosed with cancer that dies of cancer, especially if you're able to get diagnosed on time and you can take care of that the treatment on time, which in most cases is going private. All right, so that's what critical illness cover is. So if you have your mortgage cover with life and critical illness cover, and you're diagnosed with any form of cancer or attack or stroke, do you know what? While being alive, your mortgage gets fully paid off. So even when you get back to health, you don't have any mortgage to pay again. Yes, the premium is a bit bigger than what you will pay if you just covered by life insurance, right? Because honestly, people get diagnosed with critical illness more than they do that, right? So you pay more. But I think it just makes excellent sense to have that done, because some people have been helped that way, that maybe 1 year of trying to get back in health, lump sum already paid to them, they have quick care, and now they have a free house to live in for the rest of their life. All right, so please, if you just use life insurance alone to cover your mortgage, you may consider doing it as a life okay. All right, so the topic of today, before I invite too much, the topic of today is all about your policy coming back from underwriting. So what does that mean? So at times when we put in an application for you to have your life insurance in place, the insurance company wants to ask more questions, maybe due to some disclosures, or maybe due to your BMI, or maybe due to some medical conditions. The insurance company actually just wants to be sure, to check your medical records, to be sure of what they are getting into, all right? So it takes some time. While that is going on, anyways, you have indemnity does cover you. So while we're going through all that, even if they have not given you an offer yet, if they were to offer within that period, up to 1.5 million, you are covered. So I'll say, if you start discussing insurance, let's put in the application, let it go through the works. So going to underwriting means that they're going to write to your GP, right, and ask for more questions, ask for your medical record. And when it does come back, now there may be slight changes to your premium due to your disclosures, or due to what they found, or due to BMI, whatever it is, that what they call it loading, meaning it's going to increase. So for most companies, your premium may increase by 25%, 50%, 75%, 100%. Some have done 200% before. Now, that's entirely up to them or what they found on your medical records. So you already have a budget in place. Let's say, for example, your budget was £50, and suddenly your policy comes back from underwriting, and now the insurance company is happy to offer you a cover, however, at an increased premium. Let's, for example, your premium has now gone to £80. Suddenly you're asking me, Sheun, so well, I want it covered, but I can't afford £80. Now, affordability is very, very important when you're taking on a cover. So we don't want you to bite more than you can chew. So there are two things that we can do. If it's within your budget, we accept the offer. So from £50, your premium has gone to £80, meaning, and you can still get covered with the initial quote that was given to you, meaning the initial amount quoted. Now, it's not going to be the initial premium, because remember, that's come back maybe 25% loading or 50% loading or 75% loading or 100%, meaning your premium is going to increase by that percentage, all right? So if it's come back as £80, right? Let's say that's a 50% loading. It comes back as that. You can accept it if it's affordable for you. However, if it is not affordable, what we can do is to accept it at the original quoted price. And what does that mean? It means that the insurance company will now apply that loading to the percentage to what they can now offer you. So let's, for example, your initial cover was £200,000, right, over a period of time, and that's come back as £80. When you're going to record at original pricing, then that 200,000 is not what you're going to have again. It's going to be much smaller. Let's say you are now covered for 150,000, right? Because they have now applied that loading to the premium. So two things: one, accept at £80 and you still have that £200,000 in cover. Two, accept it as the initial quoted premium. It means that you will no longer have £200,000. You will have a lesser amount. Let's say, for example, 150,000. You accept it as that. So those are the two things you can do. Stay within budget. You requote at initial premium. You are happy with the increase, you accept it, and then you still have the same cover. So that's the way it works. So I just wanted you to understand, because I think there was a bit of questions back and forth that happened with one of my clients saying, oh, but this is what was quoted. It's because it's come back from underwriting, all right? And then the insurance company has already looked at the risk and they've told you what they are going to charge you to be able to accept this risk. So you will be accepted, but look at your budget. If it's within budget with the increase, you accept it as that. If it is not within budget, then we will accept at initial premium that was quoted. It means that the face value of your life insurance will now reduce considerably to the new weight that we are applied. So that's basically it. So understand that I don't make the rules, right? I'm a broker, means that I can help you access life insurance at the cheapest possible price, at the best, different providers could give you an offer. Some of them do give you extra things like, having access to 24/7 GP services, being able to actually, speak to a consultant, and you can have your fitness plan done, you have a new plan sent to you, or you are even able to speak to a physiotherapist and at no extra cost. So these are things that you can have access to while you are alive, things that you can use while you're alive, even without even talking about the life insurance. So life insurance, what it does for you is make sure that your back is tidy, make sure that your loved ones do not suffer financially because you are not there, right? So life insurance pays off when you are gone, meaning after you're dead. However, critical illness cover is you while you're alive, okay? And the income protection also is for you while you're alive during your working life. So that's basically, so it's come back from underwriting, is increased. Two things to do. Let's repeat that. Accept it because you can afford it, or let's report it as initial premium so that you can have a reduced cover, but yet you have a cover in place. That's it. On the synergy today, more going to be coming your way. I'm so excited working on my book, the book on insurance, how to protect you, your family, and business against financial misfortunes. I'm excited because a lot of these questions I'm able to answer for you. And so if you watch this and you do not have a life insurance in place, let us have a conversation. Send me a message to me. You have a number, 074-1185-7200. If you are not in the United Kingdom, unfortunately for now, I am not able to help you. But if you are in the United Kingdom, let's have a conversation with support. I want to help you. They call me the superwoman of insurance, and I want to make sure that you watching this, you have the right things in place. So yes, we'll ask some questions, medical questions, we'll ask your finances, we see what is important for you to cover, what's important to you. We'll put a plan in place, and then you can go on and create your wealth. And also, I'll help you to make sure that we protect it against 40% inheritance tax, which a lot of people are not looking at. It's a huge sum of money if you have some assets that you want to pass on to your loved ones. So yeah, and it's a free service. So talk to me. And if you do have a life insurance or any form of insurance in place, is after we have a look at it, and let's see if it's the right cover for you, right? So if you've changed your lifestyle, maybe when you took out your insurance at the beginning, your BMI was higher, and now within the last 12 months or 2 years, you have actually dropped some weight. You are now living a healthier lifestyle. You know what? We can review it and get your premiums cheaper. Yeah, honestly, we can. So let's have a look at it. And also, if you do not have your insurance in trust yet, you want to speak to me. That's it for today. 2 things to do. If it comes up from underwriting and you have to pay more, if you can afford it, accept it. If you can't afford it, let's requote it at a cheaper, at the initial quote, which is already working with affordability, but just means that your insurance, the face value is going to reduce because the weighting would not have been added to it. That's it. Over and out. Please do share this. Follow me on LinkedIn, YouTube, Facebook. Share this. It's a business. Please share with your friends. I want to help you. You want to help me. I know you want to help me to grow this business, and yeah, great things are happening. And yeah, I'll be having updates for you on having mainstream life insurance for people that have the sickle cell trait or that actually have sickle cell anemia. I'm presently working with the industry, and we'll see what we can do in place to put in place for you. So yeah. If you applications have gone in, we're waiting, but I definitely know there's something happening. So if you do have sickle cell, or you know someone that does have it, let's have a conversation. Let's see what we can do. Yeah, it's a mission, and it's the synergy. Have a brilliant one.